What's up, guys? This is Casey and welcome back to the channel. So today you guys are in for a treat. I am going to be going over with you all of the key technical indicators that I used to initiate my day trading and also my swing trading positions. Now, I do want to give you guys a quick disclaimer about day trading and swing trading. This isn't the same typical stuff that you hear just for like legal reasons. It's just from a personal standpoint of things that I want to make sure that I get across to you guys so that you understand the logic and the intelligence behind the day trading and the swing trading. So first things first, just understand that when you are taking a position with stocks, that what is causing stocks to really move up and down are pretty much 70–80% algorithms. And so they are highly intelligent, order driven, meaning they can tell real-time order flow. They're highly intelligent driven AI technology that large institutions use. If you all have ever purchased a stock and you notice at the moment you buy it drops, it's because those are the algorithms. They set up a lot of different patterns and setups, and they know order flows and just all this sorts of complicated things to where in order to really be successful in the swing trading and day trading and just pretty much overall investing somewhat, but definitely with swing trading and day trading, you have to really position size. And this is something that I never really understood. And I'm going to be doing a video about this later, but position sizing is so important. And the reason being is that a lot of people, especially beginning and even not beginning day traders, they want to YOLO. They want to take, their whole account, $2,000, $3,000, $800, and put it all in one particular stock and hope that they can double, triple, or quadruple their money. And you can do that. It is possible to do that on a lot of different stocks. But what I find happens a lot of the times is that people will buy a stock. The moment they buy it, the stock immediately drops, which happens 95% of the time. They panic, and then they sell off for a loss, and then it turns right around and pops up. It's very common, especially when you're trading large position sizes or you're trading a large amount of what your account size is. And so one of the ways to really beat the stock market and to win consistently is the position size, meaning it's about the number of times you win relative to the number of times you lose. It's better to win 8 or 9 times small and lose 2 or 3 times small than to win big on 1, 2, or 3 trades, because you'll win big on 1, you'll win big 2, win big 3, you'll lose big 4, and you've lost all the gains on the 1, 2, and the 3. So just keep in mind that that's how the game is won. So with that said, I'm going to walk over with you guys what my indicators are, what I use, what my logic is behind this. This isn't going to be a high level video for this one, but I do want to kind of give you guys some helpful information for those of you who are looking for some direction. So let's just kind of hop into this. Okay, so the first things first, any day trader, investor, or swing trader is always going to be using the indicators. Now, with indicators, the moving averages is the main indicator. So with the moving average indicator, it's just basically the average stock price over a certain time frame. Now, the common indicators are the the common moving average indicators are the 9-day moving average. You have the 20-day moving average, the 50-day moving average, the 100, and the 200. So why do we use these? Because some of this is like a self-fulfilling prophecy, meaning that because everyone believes in these moving average indicator time frames, they work. And then some of this also has to do with the fact that these are just kind of the generic indicators that the algorithms also use, or solid price points to where people are looking to buy stocks. So let's say, for example, we take Visa, right? You guys take a look here and you're looking to take a position. I'm just kind of scrolling out here. Also, if you guys are curious, this is my WeBull platform. I've done a lot of videos on them. I think they're a phenomenal platform. I will be doing an updated video on the latest release of WeBull at a later video, but not on this one. So if you guys take a look as I scroll out, you will see that, take a look at the indicators. Do you notice anything special? You know what you notice? You notice how the stocks bounce off of these price levels. What a surprise. Now, if you notice now keep in mind, this is a daily. So this is something that a swing trader would use more so than a day trader, because a day trader is looking to take advantage of stocks from an individual from the same day, not over a 2 or 3 week period, a couple of days. I find that I have more success as a swing trader, meaning that I'm going to buy a stock for one day when I want to take a position, and I want to wait 2 or 3, 4 days, a week, sometimes even 2 or 3 weeks, hell, even a month before I want to take profits. But if you take a look here, you'll notice that the stocks have a strong tendency to bounce off of moving averages. You see that here? It bounces off of it here. Now, I'm just going to scroll up to the right. 2, 3, 4, 5, 6, 7, 8, 9 days. Boom, you buy it there, bounces off again. And you buy it here again and bounces off again. And so eventually it won't bounce and it'll continue to fall down. But if you are looking to take positions from a swing trading standpoint, it's an excellent way to do it, as you guys can see here. Okay. Now, depending on whether or not the stock market as a whole is in an uptrend or downtrend, will determine how successful the bounces are. You'll find that in a downtrend, the bounces will not be as severe. Once they bounce off a moving average, they'll bounce up and then they'll continue downward. But we've been in a constant uptrend, just non-stop, just a brutal uptrend, which is a good thing since March. So all the way since back we've had the pandemic and the government stepped in back in March. I mean, it's just been constant up, non-stop. So that's a good thing, I suppose. So you'll notice here, excuse me, right now, what do you have here with Visa? Well, you have another stock drop, right? So 220, it's down here to 200, so it's dropped about 10%. Might not be a bad time to go ahead and take a nice little small position size. Not to mention it's right off of the moving average. So one of a couple of things is going to happen. It's either going to come down here and touch this, or it's going to bounce back up and continue up and turn right around. We don't know. But from a swing position, this is a great opportunity to buy. Now, if we take a look here from an intraday, right, from a day trading standpoint, well, the same things apply. Now, on this WeBull platform, you'll notice that the grayed out areas, these are the after hours, and then the darker areas are the regular trading hours. So as of right now, you'll see here that the stock has kind of been in a downtrend since pretty much December, say January 1st. It's been in a downtrend, which is a good thing because if you're looking to buy, this is the time to do it. If you take a look here, you have different time frames, okay? So again, from a day trader perspective, you're going to probably day trade off of either the 5-minute or the 1-minute. Now, my personal recommendation to you, if you are new to trading, I do not recommend you do day trading. Day trading is really reserved for people who have large amounts in their account, and they're usually looking to scalp 1% or 0.5%, 1/4% of a stock. So they are going to the 1 minute, and they are looking to buy things when they pop down. So they're looking to buy a stock when it goes below all the way down, it starts to reverse up, or they're looking to buy a stock when it bounces off of a moving average after having a big run up, which this is not doing right now, things of that nature. Then they're just trying to take advantage of a little small pop in large amounts. So I do not recommend you do that. Not only that, but day trading, you have to have legally required a minimum of $25,000 in your account, which not a lot of people are going to have, obviously. And again, the people that do day trade, they have large amounts in their account, and they are taking large position sizes, $20,000, $50,000, $75,000, $100,000 position sizes to take advantage of small upticks. So I don't recommend that. I find that if you're a small position person, small account size, swing trading is not only, I think, safer, but it's also, I find it's more profitable. I can't tell you guys how much money I've lost from being impatient, from buying something, seeing that it's going to run up, and then taking a few percentage only to see it continue to run up. Swing trading is definitely the way to go. So back to this. As you can see here, if you wanted to buy off of, let's say you try to get this moving average. Oh, well, it didn't quite hit that. So you would have missed it. Shucks. Okay, cool. So you buy here, right? If you day trade, you would have took a loss on this because it went down for the day. And you would have took a loss if you went down on this day here because it went down the next day. But if you held in a few days, well, actually it had to held a little bit longer than that. Actually would have had to have held a lot longer than that. But what you would have noticed is that if you would have tried to buy either off of here, which would have kind of had you break even in a couple of days, or if you would have tried to buy here off of the 50-day moving average, you would have seen a gain from 200 to 205. So basically a couple of percent in a matter of a couple of days, which is excellent, right? $1,000, a couple of percents, there you go. And you just kind of continue to do that over and over and over again until you get a nice position size. So that's kind of the way that works. So the moving averages are very, very powerful. Another thing that almost any trader worth their salt will tell you is that volume. Volume is a very big indicator. And the reason it is because it lets you know whether or not the stock is really on the institution's radar for being traded. So you have the average volume amount that gets traded on a particular stock. And what you do is let's say it's 100,000 shares, or that's kind of low. Let's say 1 million, 2, 3 million shares. But now it's 4, 5, 6 million shares. It's starting to be double that, or even 25% that. Then that means that there's volume that's starting to come in. So there's buyers, there's activity. And that's where you start to really see those movements. So the moving indicators are a really, really big one. And the volume is a really, really big one. I would say if you guys don't remember anything else, know that the moving average indicators are huge. Another really big one that is just as huge as I got the hiccups tonight. It's just as big as the moving average indicators are the support and resistance levels. They are ginormous. And the reason that they are is because that is very similar to the moving average indicators. That is where stocks are going to actually usually bounce off of. Now, what you will find a lot of the times is, and I've noticed it as of late, is that stocks will very rarely ever bounce exactly off of the moving averages, and they'll very rarely ever bounce off of exact support and resistance, but they're trading ranges. So let me tell you guys what I mean by that. So if I go over here, right, and let's do a horizontal line. You can see here that Visa has been trading off of the support and resistance level very consistently. All right, so let's go over here and let's just do a nice little support resistance line. You have one there, you have one there, you have one here. So quite a few. Let me give you guys a stock that I have been actually trading and made a little bit of money off of, and I kind of got greedy, holding it through earnings. Wells Fargo. All right, so this is This is a bank stock that has been severely overbeaten, right, as a result of everything that's been going on. But you'll notice that if we take a look at the trend lines here, we have a line here, we have a line there, we have actually quite a few. We have one here that pretty much the stocks that they trade off of constantly. And you don't even really need to draw the lines. Just by taking a look, you can see. If we go to the intraday, this is an awful stock to buy. At least it was Friday, because they had really bad earnings, which is kind of weird. Dealing with earnings is always a weird thing. My personal opinion is that 99% of the time, if you are trying to trade, whether it's day trade or whether you're trying to swing trade, you're trying to get in and out of a stock within 3 or 4 or 5 days, you never, ever, ever want to hold through earnings, ever. And the reason being is that it is impossible to predict how the institutions and brokerage companies are going to look at earnings. So a company can actually they can actually beat revenue and the stock will drop. Or sometimes they won't make the revenue adjusted earnings, but the stock will pop. Or sometimes they'll make the revenue, but they don't have quite the same earnings, or maybe they'll lose some subscribers and the stock will drop. You just never know. So when it comes to earnings, I never ever like to hold those unless I'm investing in the stock, and then in which case I don't particularly really care. But from a technical indicator standpoint, if you take a look here, boom, you have the stock, the moving averages that is significantly lower. Now, one of the most powerful things that you guys can do to make money on a stock that I find, again, really it's more beneficial on a swing trade than a day trade, because sometimes the day trade people are looking for it, and the programs know that, so they'll kind of fake you out, continue to drop it more, and then they'll reverse it the next 2 or 3 days. You go, oh shoot, I sold out too soon. But one of the most powerful things to do is to try to buy a reversal. And what I mean by that is, if you take a look here, A reversal is when a stock is in a downtrend like Wells Fargo is Friday. If you see here, maybe you say, okay, well, I want to go ahead and try to buy it the moment that it breaks the 9 day, because the 9 day is the first moving average to where it shows, okay, it's starting to get some life back in it. So maybe you buy it here, and then you need to get a determination as to when you want to sell out, right? Do you want to sell out if it touches this moving average? Do you want to sell out if it tries to pop through? You have to decide that for yourself. But that would be a good entry point. What I find with stocks is that reversals are some of the most powerful ways to make a lot of money very fast. But it usually only works, not usually, it has to only work when a stock is in a significant downtrend over a period of a few weeks or even months. So right now, Wells Fargo has been in an uptrend finally for, I don't know, take a look here. I'd say probably for about a couple of months now after they've just been absolutely hammered since the whole pandemic broke out. But then they had really bad earnings. And so I actually went ahead, I had quite a large position size in here. I bought somewhere over here, had some nice money, ended up holding, got greedy, held through, took a nice loss on this. But this was my fault. I was kind of on the fence as to whether or not I wanted to turn this to an investment or whether I wanted to turn this into a swing trade. I was swing trade-ish investment type mentality, kind of in between. Had really bad earnings, wasn't thinking, and I took a nice little loss on this. But I may still actually end up entering this depending on how it rebounds from the bad earnings. We'll see. So maybe I got too panicky and it's going to reverse in a couple of days. Or maybe this is a shakeout, or maybe it's going to continue to go back down. Who knows? But anyhow, this is a good entry point right now because if Wells Fargo does continue to fall, and let's go to the 1 hour. The 1 hour is a really good indicator of a nice reversal because it gives you a longer term outlook, right? A 5 minute just literally gives you within the day or two, but the 1 hour can give you all the way up to 2 or 3 weeks. As you guys can see here right now, Wells Fargo actually hit the 200, which is a solid indicator when you want to go ahead and start to take some position. It went all the way down, came up, tried to retest it again to see if it could try to regain to do a reversal. And the buyers are like, nah, we're not quite ready yet. Nah, not right now. And then begin to sell off some more here. So we don't know if it's going to continue to sell off or if it's going to start to get some life back into it and then we'll reverse back up again. But this is a perfect example of a stock that you guys want to watch for a reversal. This is ideal, actually. So I encourage everyone, and I just want to be very clear about this, guys. I don't currently own any Wells Fargo. I've already took a loss on it after I was up about $3,000. I do plan on entering this stock again once I can see some life in this. And this could be a day or two, who knows. But this is a perfect example of a position to take when it's oversold, right, which it clearly is. And I'm sorry, also, I left out that indicator as well. So we discussed the moving averages. We discussed the support and resistance level, but one of the other things I left out that's a huge indicator that I use is an oversold and overbought. Now, the RSI, which is down here, it stands for the relative strength indicator, as you can see here. Basically, anything that is over 70 is considered overbought, which means it's probably time to take some profits. If you see here, this over here at this point was considered overbought. Well, very close, like 73. And if you continue to wait, right, you didn't have any much more upside to this, so probably a good time to get out and then started to sell off. But now what do we have? We have a stock that's now oversold. Now, just because the stock is overbought, I'm sorry, that's my cat in the background. Nice. I just got a new, we call it a foster cat. And we've had him for about a month now, and he's getting acclimated to our other cats. So they love each other. They get along so well, but every now and then they have a little tissy. So I'm going to actually leave that into the video. Makes it more authentic. So just because a stock is overbought or oversold doesn't mean that it is actually a time to buy or sell. But it's a good indicator if all of the other indicators line up that it's time to maybe take some position off, or it's time to assess, to assess where you are with how much money you have on the table, how much money you're up or down. So the stock here, you can take a look, 73, it's overbought. And if you bought there because you tried to buy this breakout, well, look what happened. Sold off, right? Here, people are probably scared crapless right now, right? To, oh my God, Wells Fargo's, you know, in a downtrend. Well, you know what? You'd have a hell of a better chance of making money here than you would here. And so the RSI on the 1 hour, excuse me, is oversold. Okay, so a lot of you guys are gonna probably ask me, well, why did I go to the 1 hour and not the 5 minute? Well, the longer time frame you use, the more powerful the indicator means, right? So typically it's almost like a wave. So the little 5 minute wave, okay, so it's oversold. And then go to the 10 minute, the 15 minute, okay, oversold. But then when you start getting into the 1 hour, this is kind of one of the main long-term, the introductory long-term indicators of when something is really oversold. And so I usually find that the longer indicators, the more it's oversold or overbought, it gives you the higher probability of it reversing, right? So stock could be oversold on the 5 minute, but when you go to the hourly, it's not oversold, right? So I just go out to the hourly, and the higher time frame you go out to, the more it's oversold, overbought, the more legitimate that indicator is. So right now on the 1 hour, Wells Fargo is definitely oversold, okay? And that doesn't mean that it's going to reverse. But what it does mean is that we can at least look for a very small pop at least before it continues to sell off, if it's going to do that. It may very well just go ahead and start to reverse now, because investors go, oh, okay, you know, it actually wasn't that bad after all. And then it starts to go back up again. But I just personally didn't want to take that chance, because I was in a very nice size. And, you know, I just keep waiting for these markets to turn around and roll over, which they just haven't seemed to want to do as of late. Another big thing here too, if you take a look right at the indicator, right, the RSI said that it was overbought, and I saw that and I continued to watch it. I'm like, well, man, you know, nothing's really breaking it. And for all intents and purposes, from a day trading or swing trading standpoint, with specifically the swing trading, I mean, you absolutely have to take some money off the table here, particularly knowing that it's overbought and coming into earnings, because what this means is that everyone sees this indicator. And so if Wells Fargo doesn't blow out the earnings, what's going to happen is that there's going to be a sell-off. And that's exactly what happened. I think they beat revenue, but their earnings wasn't as strong. So it sold off 9% or something like that, 8%. So 8%. So investors may stop panicking. They may turn right around and may go back up again. So, but in the short term, good thing to go and just take the L on that. So those are the indicators, guys. You have the moving averages that you want to trade off of. Always, always, always buy a stock on the pullback. Now, you do have some stocks that move very fast. Let me give you an example. This is a stock you guys have probably never heard of. You've probably never heard of this stock before. I've never heard of it. It's called Tesla. If you haven't heard of this stock, then welcome to planet Earth. If you have heard of this stock, which 99, if not 100% of the whole world has, then you notice here that this stock pretty much shows that it is overbought almost all the time. But what you'll see here is that a lot of the times, just because the stock shows that it is overbought, it can sometimes continue to go up and up and up. And what you'll see here is that, though, even if you do want to get into a stock because it's in a solid uptrend, you do want to wait for some type of pullback. Even if it's just back to this first moving average. Now, one of the things that I like to do is that if I'm going to buy a stock that is in a solid uptrend that I'm interested in buying, I'm not going to wait for it to go all the way down to the 200 or to the lower moving average, just because it just isn't going to do it. But what it almost will always do is that it will turn around and it will touch at least the 9-day moving average. It just always will. Now, whether it takes a week or two, I don't know, but depends on, you know, when you buy the stock in the uptrend. But it almost will always do that. Hits the 9-day here, kind of staggers out here through the 20-day, and then it goes on again. And then it continues up and up and up and up. So that's that, guys. So I hope this video was beneficial. I will be making a lot more videos on about indicators, about the logic behind day trading and swing trading, and just also an updated video on the WeBull platform as well. I've been getting a lot of questions about that. So I do appreciate you guys who have subscribed to the channel. Appreciate you guys so much about watching the video. If you've gotten to the end, Obviously, if you like the content, make sure you subscribe. If not, then I'll continue to make other videos that you like. Hopefully, you subscribe then. Also, please make sure you guys leave some comments below as well. Was this video helpful? Did I leave out some things that you guys think that I should have discussed? Do you use different indicators that you swear by that I haven't brought up? Just things like that. So other than that, thank you guys for watching, and I look forward to talking to you later. Take care.